I'm so excited to be here today again because Wednesday turns out to, well, now be my favorite day because we are doing something that I love. We're doing Elliott Waves. Okay, so in today's Elliott Wave Focused, provided to you by Omega FX, we're going to have a look, guys, at three pairs that we haven't looked before in terms of Elliott Waves. One is going to be the dollar yen, the other one is going to be the oil, and the other one is going to be natural gas. We're going a bit more commodity style on the two of them today. And dollar yen, because actually both of them, like all three of them, have good potential either to the upside or to the downside. And I'm going to offer you here the main scenario, and I will explain why it is my main scenario, and I will also give you alternative options. Okay, so without further ado, let's have a start off with the dollar yen. So I'm going to take you a little bit further out just to see where we are, where we're looking at 10 years ago, right? Prices. And I want to take you out because one of the scenarios looks at a different cycle degree sort of pattern compared to what we're looking currently. But we're starting off with the main. This is an ABC correction, guys, and you're gonna notice that markets, if you look at the long term, they correct, and within that you see trends, because you don't get prices moving impulse up unless if it is like the S&P. But in the forex currency pairs, because you always get a pair against another, and competition is a bit, between the countries and the currencies is quite heavy. You're not going to get something like extending for like many years, creating progressive moves. Rather than you're going to get medium and term progressive moves within corrections. Okay, so a correction, just as a reminder, it's something like looks like an 1, 2, and 3, whereas a progress is 1, 2, 3, 4, and 5, just to make the distinction over here. So looking at the dollar yen, this is an ABC correction. So my main scenario is that we haven't finished wave B yet. Okay, and that means that we have to look internally what makes wave B. Well, wave B to me looks like, for now at least, that it is a W, X, and Y. And it could also be an ABC, which is a flat pattern. But for now, because of the structure of this first leg, and because of the fact that we have not even yet seen where wave X has stopped, we cannot use this as the main, because when and if X stops at a level that is above the 90%, hold on, which is over here, the 90%, right, which is 123, only then I will switch this to an ABC, which is going to be a flat. So if we do get to around 120 or so, which is where X is expected to go, or even perhaps higher, it does, but if it doesn't get to 90, it cannot be an ABC flat pattern. Okay, so it has to be a W, X, and Y. So far, however, we haven't even done the 62%, okay, for this leg to the upside. And for wave X even, we do want to see something like 79% at least, which is around 120. So you understand why I'm looking at this opportunity today, right? Because it is an extremely good opportunity in the medium and long term, especially when we look at the RSI and the MACD, and they don't really provide much of an exhaustion here, or a bearish divergence, or a hint that this is going lower. So with that said, and if we just go a little bit closer, I'm expecting an ABC correction in wave X, okay, which means this is the blue degree, the blue labels. So my wave C here is an impulse move, a progressive move, right? We talked about this 5 wave. Yeah, this is exactly what I'm expecting to see. Now inside of here, this is 1 and 2 and 3 and 4, as you can see, right? It's just different symbols. Inside of wave 3 over here, I am expecting 1, 2, 3, 4, 5 again, more progress within the progress. Okay, and this is what we currently see in here. So let me just go a little bit lower down now to show you what I'm expecting and why. Okay, so with this wave A and B done down here, this is my wave 1 and my wave 2, and this is where we start a new structure to the upside. Okay, hold on. Okay, maybe actually my 2 is probably here, and this is a W, X, and Y, which brings us to a complex move initially, and then a correction. So you got A, B, C, D, W, X, A, B, C, D, E. So this is a triangle, okay? And this is what it is. So we've got 1, 2, 3, 4, and there is more room for another leg up for wave 5. Okay, so 1, 2, 3, 4, and we want to see the fifth one coming in. Okay, so we're gonna go down to subminute here as well. That's gonna be, why is this? Subminute, excuse me. There we go. So you got 1, 2, 3, 4, and we're expecting for the fifth one. What we want to do here though is we want to measure if wave 3 is indeed bigger than wave 1. And you see it is. So we can assume that this is indeed a move to the upside that is going to see an end fairly soon. But before that, we can expect prices to find maybe a top around 115.79, even 116.86. And why do I say that? Is because simply since we have 1, 2, 3, and 4 so far, and what we have done in here internally is only 1, okay, and 2. Well, we are expecting to see 3, 4, and 5 again, right? Which is going to bring us a little bit higher to where we currently are. That's going to be, of course, in the micro degree, and we can give that a different color. Let's make it blue. Just to differentiate between all of them. So you can see we do get signal on the MACD and on the RSI though. Okay, so the main scenario is one in the short term that we're going to continue higher and stop around 118 or so, because we can use the Fibonacci expansion over here and, you know, assume our wave 3 is going to be around 116.70 or 80. So our 5 is going to be around 170.50 or so, perhaps even higher. Or we can look at it in the short term as this being an ending diagonal, okay, which means we're going to see corrective, not progressive move, okay, which means this is going to be something like this, okay. And we're going to see prices do 1, 2, 3, 4, and 5. That might just get us just around 116, and then we start correcting. And this is the case because I'm looking at this MACD signal and RSI signal that do indicate or suggest that, okay, we might see, you know, we are seeing an exhaustion, and we might see that continuing in the shorter term. So this is going to be all for the dollar again. Now I'm going to take you quickly to oil, and I'm going to go out over here on the daily as well, just to show you a little bit of a long-term price action and why I'm expecting what I'm expecting. This in the cycle is an A, B, and a C for me. Okay, so wave A done, wave B done, and we are actually heading up for wave C, which can be in the long term, I repeat, quite bullish. So in the medium to long term though, we have to really assess the price action over here to make projections that make sense. As I said before, we always need to pay attention to the 5 waves because this is where we get progress. Now, as you remember with dollar yen as well though, we looked at one potential wave 5 that is progressive, and we were expecting the 118 or so. And we also looked at a potential where there was no progress, and that looked like something like this correction, and we expected a move to the downside, which is the ending diagonal. So we're looking at the progressive move versus the motive move, that is this an ending diagonal. Over here, the main is the ending diagonal. And why is this, guys? It's because we do have an interaction between these two waves. So progress cannot be seen, can be seen indeed, but currently, because of the interaction, there is no progress, which means very likely this is going to turn into an ending diagonal, okay? Which means what? Which means that this is our wave 1, our wave 2, our wave 3, our wave 4, and we want to see a wave 5 ending, okay? And this is the potential I'm looking at this currently. Now, what we need to make sure, because there is some rules when we look at Elliott waves, we need to make sure that our wave 5 is going to be smaller than wave 3. Otherwise, we are going to break the rule that wave 3 cannot be the shortest wave. Now that brings us up to 91.77, which means I have to go below that. So the maximum I see for this market currently, okay, is the $90. Now, since we are still correcting in wave 4, we need to also assess where this correction can end. And the best guide to do this, or guideline, is to measure the correction in wave 2, which is 79%, and assume the same for wave 4, or even a bit higher, because it's supposed to be diagonal. So I'm looking for 62 and 67. I would prefer the 62, but obviously we need to get through the 50% and even the 38% for now. Okay, so let me just quickly delete this. So I'm looking at something like this potentially. Okay, this is the one, and we're gonna get to, maybe even this is finished. Okay, but we can go even down to 73 or so, but this looks to me okay. Okay, because it has to look diagonal. So perhaps, and I repeat, perhaps we have finished with wave 4 down here, and now we're moving up for the last upside leg that is going to give us, of course, hold on, it's going to give us a fresh high above 85.45. Now we don't need to get to this line to start moving lower down, but we certainly need to get past above 85.50. So to me, because an ending diagonal, it's an ABC pattern, so we need to see ABC, ABC, ABC all over the place. Let me just bring this over here. We're going to be still very early in this upside move. So this is going to be a shorter degree, minute and gray, and this is what I'm expecting, guys. Okay, currently we do have 1 and 2 and 3. Okay, let me just take you a bit further lower in 1, 2, 3, 4, and 5. This is what I'm expecting. Okay. That's going to be minuet. The color is fine. So I am looking at prices to go up to 79.30 at least, okay, which is very close, and perhaps even higher. That's going to be the third, that's going to be the fourth, and then we're going to get the fifth one. Okay, and the fifth one might be extended here. We might get up to 81, 82, so that we can make for the distance that we expect this to end up to, well, above 85. Okay, once we get this 5 wave leg ending, we're going to get a correction in wave B and then a continuation up in wave C. Obviously, we will be looking at this closely. I want you to see at this signal over here on the RSI and the MACD, even in this 2-hour time frame. Very important that we stay above 77.13. Otherwise, this move to the upside is going to be invalidated, and we could start moving lower to see a lower wave 4. Okay, and that's the alternative. Now let's go also quickly on natural gas. Natural gas out on the daily. Let's hide this. Well, to me, this looks like a low is in. Okay. Excuse me, that should be here. A low is in. Okay. And with that low being in means that we are moving up with progressively. Okay. As you remember, as we said before, the starting point is up here and the ending point for now is here. So as long as we remain above 345, we remain progressive, which means we remain bullish and there is no invalidation of this upside move, okay, for natural gas. Now, since we did have a correction here, a deep one to the 79 or so, looks like it, and here around the 38.2, it might be soon time where we're going to start seeing prices slowly moving up. Okay, this tilt is going to offer an opportunity to at least back to the previous high, 650, and if that comes with high volumes, and we're currently seeing high volumes, by the way, this is going to give us potential targets there. Extended wave 3, you see, 7 and 754, 755. Okay, now usually and if we assume that our wave 4 is in here, right, the 38 and the 62 are very good indications, projections to consider wave 5, okay? But because in commodities prices, usually the fifth wave is also extended as much as the wave 3 is, then we can get up to 980, which is going to be, the fifth wave is the same as the third, okay? So buckle up, because that might be a very good opportunity. And if we look also at the Fibo, okay, we can identify some levels to take into account when prices are moving up for potential profit takes, or you know, maybe even you know, closing trades. 725, 9, 1085. These are very important levels, okay? Now in the shorter term, let me just go perhaps down on the 4 hour, okay? We still see that there is room for this to move lower down, and for now we do see some volumes coming in here, which means there is support, but we don't see anything that relates to a bullish signal. We are actually closer to the lower end of this channel rather than even to the middle of this channel, okay? So in the short term, okay, we might correct lower, okay? And we can work out a couple of levels here by using the Fibonacci retracement. We've done the 38 and we did go below. We tested the low below that low as well over here, which means the next level to test will be below 473. But the more we test, the more the probability to go down to 439 increases, okay? And then down to 62 even, okay? Because this is a wave 4. I mean, it's not supposed to be as deep, but since we did get the 38, and since we had an expanding extended wave 3, we can go down to 62 as well, okay? So prepare for a potential downside, for more downside, as you know, the MACD and the RSI also don't give us any signals of a potential reversal for now, at least, apart from very short you know, here sort of move that might even be already priced in. Maybe we're going to get another leg up, but you know, very likely to continue lower down, okay, as long as we remain below 522. So my 522 is our level for potential move to the upside, okay? And then of course the median line of this channel, as long as we remain below, I repeat, then this is more likely to go closer to 4 rather than closer to, you know, to 550 and 6. So that's gonna be all for this week's Elliott Wave forecast, guys. I hope you did enjoy this video and you did find it educational. If you have any questions, leave your comments and I will respond to them as soon as I can. Thank you very much for working again, and we're gonna be again here, unfortunately, for this particular video in a week's time. Take care until then and trade safe.